Hey guys, I hope you're all doing really well. So today I just wanted to basically make a quick short video just because I haven't really released anything in a while, and I thought I might just make this one a video to just keep coming back to. So what I wanted to do is just go through as many pairs as possible and just basically mark up the sort of trades that I take so that you can get a good insight about what I'm really waiting for and how I'm building my profitability. So essentially, if you look at Aussie CAD, pick any bit of price action, what I'd be looking for first is, as you can see, we're on the weekly. Don't always have to wait for these. Obviously, there's loads of multiple points, but let's just say that you've got a weekly value area there. You've also got one just above. Which one am I going to put more attention towards? It's the one just above, but I am also going to pay attention towards that particular one as well. So let me just rewind the clock here. Just play it there. And essentially what I'd be looking at now is, as we've tapped into those areas, as I'm pretty sure we were here. Okay, yep. And as we can see over there as well, I can already see trades in there on the way down. So as we look at it over here, so I'll rewind it back over there. If you take this most previous price action here, what I'd be looking at over here is, obviously we had volume accumulation, price did come all the way down here, so then we would want to identify what did price actually tap into down there. So then we'd come back up and we'd see that price actually took out these areas of liquidity. We left a bit of a massive gap here as well, so we understand that even though price took out this and sharply came back up, there's the possibility that we can still come back down as much as we could go back up, because this is a range bound situation. So we also understand that we're not going to really be holding this for a very long time, unless we're a long time trader and we're trying to use up a decent amount of margin, then fair enough. But you know, you can hold these ones on your portfolio. I just think that you're much better off getting in and out because of the overall market condition on the weekly. So you can see how that's already been priced in. The second point is that what we can see over here is we've got the bit of liquidity we had a bit above. We didn't really respond to that, which is fine. And then as we've responded over here, we want to see how prices reacted towards it. So we'll go to the 4 hour. I'll probably just replay it back to this point here. Okay, so what we can see on the 4 hour is we had the response, and at this point here we don't know if we're moving to the upside or to the downside completely. We just know we're quite neutral. So at this point here, even though we had something like that, we understand that this could probably do something like that, become a little bit irregular, this becomes something large, and then what happens is, you know, this eventually goes long, and then it becomes a part of the overall move to the upside, kind of similar to something like that. But again, we didn't get that, which again is, it would just be a part of our forecast. So in some ways we may have not put this pair on watch because we over forecasted for something larger. So what I would be doing then is I'd essentially be seeing how price is now responding to this low, to this area here, and what we can see here is that becomes the retest area here, which is very important, and then price comes back up and scoops for it. So what we can see here is, even though we had this sort of forecast here, we don't need to put too much weight onto it. Why? Because we've already kind of done the work up here, and then what we're actually isolating is the fact that we've pushed down, we've then created continuation, we've then broken the low, we've then scooped up, left a bit of a print, but the thing is that print has retested this, we've come down, we've dropped, we created another bit of liquidation, we left another footprint there, and then what happened is we committed, we failed, and then in a state of more so of an M star, we kind of just came all the way back up here, retested this, and then rejected and sold off. Now, for a lot of people who are not very familiar with trading this way, the real question here is, it's not how did I miss the trade or how did I not get in, it's actually what could I have done better to get involved in this position. And I'll be honest with you, if I just clean off the charts for a second, and we just isolate that one piece of price action, we're then looking at this. We've got price right here. This part here we're not putting too much weight on, but right now we're on the 4 hour. So even on the daily you could have probably taken a trade on this, but if we isolate this now on the 4 hour, what we can see is the exact same repetition in the market. And I think this is something that I've been taught over a numerous amount of times, is that repetition is something extremely important. When the market is repeating itself, when it's continuously making the same sort of patterns, the same behaviors, you can take advantage of this. Now the great thing about this is, even if you miss this trade, there was another trade all the way down here, and you could have taken this in multiple ways. But let's look at this just on a 4 hour. So we can see that price is now hovering above, right, and we're creating some sort of push up. Are we going to just create a small squeeze and then continue pushing and then maybe tap into the next point, or maybe even move up higher? At this point you're still at a neutral level of mind. But what we could see here is that we've actually broken through, we've committed, we left a bit of a footprint, which again is retesting the same back end of what we saw over here with all of that price action, and then we followed through again. Now I would say that this trade is a little bit more tricky to get involved in, and what a lot of beginners may want to do is probably see something like this, maybe get in there, stop loss above, and be like, yeah, I'm in. Well, I would just say that's not the best sort of situation. In fact, the best situation would have been if we followed through and we created continuation down here and we went. That would have been the best low risk trade, but we don't always get it. So in this situation, if you were going to take the trade here, stop loss above would have been your best situation, in my opinion, because even though you'd be playing that range here where you'd basically be getting a 1% to the low, you can still manage it. But really and truly, it's one of those ones where you're quite high up in the run anyway, so you don't know if this is if it's gonna develop, come all the way back up, come back down, and then it just becomes a part of this very corrective move here that then taps into like this liquidity, maybe even spikes up, comes all the way back up, and then becomes a part of that larger flag that we were kind of looking at before, right? And then this becomes something larger. We don't know these things. So this is why that a lot of people get caught out in trading, because they have a bias, and with that bias they start to believe the fact that the trades that they're forecasting have to play out. So let's say in the case we saw this, we didn't get that trade down here that we were looking at, we didn't get the push down where, you know, we were essentially looking for something like this, get a trade in here, and we would have got involved, right? We didn't get that, so that trade didn't come. So there was no trade in the area, but we understood, right, what was happening. Price then followed through and committed, and then came down to this low. At this low, what happened was we created another pattern. Within this pattern is where the money's made. So what we can see here is that from a higher time frame perspective, we rejected here, we pushed down, we then had a little footprint, which we then retested the back end of all of that. If I put this over here, retested the back end of all of that, and then we sold off. Really and truly, this was more of an experienced play, because we didn't get the entry, but we can only tell that in hindsight. For a person who was not as experienced in trading this way, it's very, very possible that this trade would have left you emotional, because you would have watched it, waited for numerous days, and then you wouldn't have got an entry and it would have sold off. And then by that point, you would have probably, potentially, you would have made some FOMO money or taken a loss or multiple losses. But at the end of the day, you know, the trade idea played out, and you can see the psychology of how long it took until it did play out, but it did play out, which is the most important part. So anyway, moving on. So what we can see here is that we have the continuation, the same psychology again. Now, the only difference here again is not much in a way to what we saw here. It's just, it's easier to protect. And the reason why I say that is if we take this ray line and we slap it on here, what we can see in isolation, which is beautiful, is despite saying that's the low, that's not really the low because we've tapped into the higher value area. So if we go back out to the daily, what we can see here on the daily is we scooped, we tapped in. Really and truly, our low is kind of like down here. So we're playing the range from up here to down here. And at that point there, we'd obviously manage in the case that we don't sell off and we start developing. But really and truly, this is looking pretty good. So we would have two ray lines. We would pretty much have one around about there and one about there. And we'd evaluate it closer at that point. So then we'll go back to the 4 hour. Did I just miss something? No. So yeah, that's the base, that's the middle point off this micro point here that we're looking at. But really and truly, we're not putting as much weight onto this one anymore. Why? Because this is practically sitting on the low. So I'll just clear up the charts a bit here. So we can see that we're done with this. We've retested that. That's done its job. We can clear that off the charts. We can then see we didn't get any trades in here, so that's fine. There was a trade, but obviously again, like I said, you would have had to just take it where it was. And for that sake there, I don't think a lot of people would have been able to do that. But how you would have just done that is, obviously as we were on the 4 hour, you would have seen that 4 hour reject, and you probably would have had to set a pending order. So even without that though, I would have probably been in around about there, give or take. I'll just double check that. Let's have a little look. I believe it is this tool. Yeah, maybe, possibly, who knows. I don't think the trade would have played, but let's just say that there was no trade. But you could have taken it there, set stop loss above. Now that looks like a big stop loss, but it is what it is. As we said, you're playing it into that low, so you got about 2% there. It played into the low for 2.5, and then you'd be playing the bigger move, which would be down here, which would be to around about 4.2%. And that would be the trade. You can just see, like, we broke above, we had a strong 4 hour follow through, we closed, we hovered for a few hours, and then we broke lower. Nothing wrong with that at all. I think, you know, the trade's solid. I think the only negative thing we could really see is that, you know, this could still mess about and move up higher, but it's the risk that you'd accept to take. Anyway, we'll move on to the next point. So trade over here is Aussie CAD over here for the continuation. So we pushed down, we broke the low, we're trading through this low. Arguably we are on the low off the point to the left, but we understand the bigger picture is we have a move to the downside. So then what I would do is I'd measure this up. I'd look at this from an A to B lag. So I'll take it from here, measure it to the base of that, take that, and then I'll just look at it and be like, okay, that makes sense. We could trade into here, or we could succeed it and go further. So you can see, you know, these are the sort of exit points that I might be looking at. What we can see here, if we go back to a 4 hour, is again the exact same thought process. Now there probably was more of a refined entry in here, and the reason why I say that is I'm staying on the 4 hour because I don't need to go to any lower time frame. But if I just quickly go to the 4 hour here, we can see we tapped into that liquidity point. We then had the follow through. Because it's a 4 hour, I'm not really too concerned as well. I can just really get protected in here as well, 55 pips, and then I'll let that run. So we're basically playing this trade into the low there. At that point, we're running about 1%, move to break even at that point there, and then we're just literally running off. And as it committed, eventually it ran for around about 4.3, and then it pulled back to around about 2-ish%. At this point, we still haven't tapped into that low, so I know it's highly probable we are coming back in. So I think at this point here, where we hit around about 4.6, and then we dropped off, I think around about 5%, I definitely probably would have locked in and got out. So 5% there. Yeah, around about here. Probably with the pullback, I probably would have not survived it. I probably would have got out for 4 at the end anyway, which would have been, it is what it is. Couldn't really do much about it, but this would be the trade idea. Now, was there another trade? There probably was another trade in here somewhere, but again, you can just see for a trade that you would have been patient for, you walk away with 4% here. So thought process here is, you know, we had the scoop, we came in, we tapped the liquidity, we sold off, we missed the trade, or we didn't get a trade. We then had another continuation here, which was basically playing with the liquidity of all of this, was playing the A to B leg, and then eventually was playing it into this low. Then what happened is we got it. Now, yes, this trade did continue selling off, but not in the sort of price action way that I would have really wanted to take advantage of. So let's actually pick another pair. Let's look at Aussie Swiss, why not? So Aussie Swiss, another interesting pair that a lot of people probably would write off quite quickly. Now, let's pick a value area. So I can go to the daily. Like I said, we don't always have to use the weekly. We can use the 4 hour, we can use the daily, but it's always good to get a higher time frame picture of what's going on. So we can see there's a point right here, and yeah, let's work with that because we've already moved away from this one. So this is an interesting one. So what we can see here is that we didn't quite tap into it. I mean, obviously you've got this point, you've got the one above, you've got the one above. So at that point there, you're gonna really cause yourself a lot of headache when you're trying to pick each and every point. And I think this will be a question that some people will ask when they watch this for the first time is, how do you know that's the point? And the real question is, nobody actually knows the truth. We just know that there's liquidity sitting there because we sold off from that point. So logically, if price was ready to sell off from a certain point, let's say this point here, and just really sell off, if price was going to come back, where would it come back to? It'd come back to the point where everyone just pretty much started rapidly selling. And what you don't notice is you don't see the orders, but a majority of people, what they'll do is they'll still get in here, but they'll protect above here. Right, just above, they'll be tight and aggressive, and they'll do that and they'll open up multiple orders, and they'll keep just putting their orders here. Right? Yeah, okay, the positions get smaller, but there's loads of people FOMOing and trying to get into this trade thinking it's selling off to the moon. People get in for 1-to-1s, people get in for 2-to-1s, most people get in for 3-to-1s or more, but just food for thought there. So what we can see here is obviously we came up, we tapped into that liquidity, we didn't sell off properly, right? And I think this was the clue. Because we had this gap, what we really would want to see is that price just really just went like this and just sold off, right? And then that would have been the clue that, okay, fine, that was enough and it's done what it needs to do. But when price isn't really going and it's just very choppy like this is where, you know, when you're getting into these shorts, you want to be aware that this can probably just come back up and do this. And then sell off. And then you're sitting there thinking, oh man, how did I miss the trade, this and that? Well, the truth is you got in too quick. And I'm pretty sure a lot of you are nodding your heads when you're reading this and listening to this, and you're looking at and you're thinking, I've done that so many times. Well, it's a trap. That is a trap in the market. The market needs you to make a decision, and it will do whatever it can to provoke you to make a decision. But then it will also find ways to keep you in the trade, to convince you that you're right or wrong, right? They're always trying to make you think that staying in the trade is going to be your benefit. Well, your intuition usually kicks in and warns you. So let's say we've got the low here. What have we done? We've retested. How have we retested? We've retested in a form of more continuation, okay? All of this you wouldn't touch, but once you've broken that and you're showing a lack of commitment to the upside, we can then be testing to shorts. So again, we can see we had the trade here, stop loss above, and we can play that. Price then sold off, came back up. What did it do? Did the exact same thing again. It retested and then failed. This one didn't quite complete in the best way. It did give you a bit of a V, but arguably you could take it like this, stop loss just above, and you're in there, and you could play it to low. I mean, you'd really be playing like a 2 to, oh no, yeah, you'd want to be playing it into the next points, but this one arguably you would have probably walked away with break even or small profit, probably 1%, because it would have come down here to 3. You wouldn't want to be too aggressive as it's kind of going. Yeah, I mean, even 2-ish% would have been, yeah, 2-ish% would have been alright around about that period. 1.5 arguably after it broke that low, came back, went back up. But yeah, so what we can see is obviously it did trade there as well, so we'll mark that one up as well. This one for sure I probably would have, because I was just looking at this point here. Now, do I believe that's the point? No, but then am I going to survive the pullback? I'm not sure. And I don't want to go with certainty on any trade. And like I said there, I'm not sure, right? I don't know for certain if the market's going to pull back sharp, the market's going to come all the way back up, tap in to retest these areas. I just want to make sure that I'm locking in something to move on to the next point. So Aussie CAD, for example, walked away 4% after a huge amount of days, and then over this one, you know, you would have got in here, you would have seen a sell-off, tapped into these areas, you would have been running about 4%, came back up, you walked away 2.6, eventually came back up, retested these areas. You didn't need to get it at the very top. Remember that with these trades, right? I didn't get it at the very top, but I did get it once I got better confirmation. Was my trade safer? Absolutely. Is the market certain? No. Sometimes I'll take a trade like this and I'll take a loss, but it's what you do after, during, and before the trade that determines the outcome of your day. So what we can see here is we tapped into this, we pushed down, we got continuation, and then we sold off. Again, this one I walked away with 1.5, right? Pushed down, broke the low, came back up. Exact same thought process. You can see that repetition there again, not just within the charts, but within myself. Move on to another one. So essentially, if we're looking at this now, we've got about 4% on that, got 2.6, and then we've got about 1.5. So overall, we're looking at around about 4, 5, 6, 7, 8%, pretty much, give or take. And yeah, Aussie yen, another beautiful pair. You know, I mean, again, you can trade anything. You can apply the same methodology, the same thought process, but the only difference is sometimes you have to price in the fact that you need a large stop. What are the spreads during swaps? How am I going to mitigate against news? These sort of things you need to experience and learn, but not through losing money. Sometimes a loss of money is what it takes, but you need to understand that it's not always about being good at technicals. It's also about being able to manage yourself. You don't want to be the sort of person that gets overconfident and then over trades, over risks, right? That's bad. That's not a good trader. A good trader is somebody who can identify that price is moving, right? What do we have? For example, we've got value area above. We've got liquidity just below. Sharp liquidity as we just spoke about. So I'll put that in. Oops. We've got this over here. Price then sells off. But in this case, let's say price sold off. We didn't get anything progressive. Looked like it was going to come all the way back up. Tapped into this area. Sold off, came in, did the same thing again, and then at this point here we actually had trade number 1 in that area, and you could have probably taken it reduced, but I preferred to have market risk. And then we had trade number 2, which again was right here. And then we had trade number 3, but at this point here we can see it's squeezing. This is usually a sign of reversal. You can see all of that. So you're basically trading this channel, but understanding that it's not going to be long-lived. It's going to be a short-lived trade. So you want to be getting in precise, you want to be getting out. You don't want to be holding in overnights. You want to be pretty aggressive with a trade like that, to be honest. Because of the market condition, how the sequence is moving. That's a very, very important part that a lot of people miss, is they don't price in the fact that the market condition is not your typical sell-off condition. There's reasons for it to go higher. If price has reasons to go higher, you want to be more cautious, you want to be more wary, you want to be more selective with the trades you take. Because if you start taking trades like this and these sort of market conditions, let's say over 70% of the time, not to say you won't be profitable, but you won't be as profitable as you really could be. Now, another question a lot of people do ask is, how do you know that price is going to sell off from here? How do you know it's going to be not going to be a market condition like this? Or how do you know it's going to be a market condition which is sharp? Well, sometimes the market gives you clues, right? And if I just pick up, let's just go to the weekly, because again, it's more than enough. If you look at price, right, and you have to ask yourself, when you get these corrective price actions, where are they going, right? And that's the real question. Where is price going? Sorry, it is about 7:28 a.m. I woke up a bit early. I was feeling very charty today. So yeah, basically, when price is corrective and it's moving, but it's moving into a direction, usually there's a reason for it, and I'll flip the chart quickly. What we can see here, liquidity correctively came down, tapped in, and then a blast of price, right? Near missed it down there, had a mini double bottom, didn't quite tap that, but we had a blast and we just sold off. Remember, this is inverted. So then as we moved to this point here, what we saw, price took out the liquidity, messed about a bit, and then went back, created a continuation here, and then went and filled it. Again, we left another gap, we just didn't get to fill that point down there. Price then scooped, made its way back up, left another gap, and you can see that this is, overall it's a range bound market, but there's a lot of trading opportunity in there. Now, as a trader, we know this is value. When price comes into these areas here, and these areas here, we know that we could probably take the trade and we can move to the other side. Now, we have to understand that the liquidity is actually truly down here. I think a lot of people could get trapped out in those areas, right? Because when you look at it, remember what I just said earlier on Aussie CAD, I believe. The sharp sell-off was actually here. This was where the liquidity was built up, and then we just moved away. And now we're just creating this larger correction. But really and truly, this is where the value is. So if we're going to be marking this up, that's our pattern. When we get there, probably 2025, 26, 27, who knows? But at the end of the day, that's what we're trading right there. And when we get that, that's when we can really start, actually position ourselves in a long-term trade. But again, I'm not going to be getting into Aussie yen on the weekly. I don't see myself getting in Aussie yen on the weekly. Take a trade here to hold it till down here for how long, I don't know. But you could make a decent amount of percent, Let's just say, for example, you were able to get into a trade here. You had stops around about, you'd get pretty aggressive high up in the run anyway. Probably getting around about 440 pips over the course of maybe the year. Who knows? You might even be able to walk away with 40% on a trade, but with swaps included and everything, it may be like 30%, 38%. Who knows? Just want to kind of point out, but this same methodology you can apply on all time frames up to about a 15, I'd say. Aussie, it's just been an Aussie day. Yeah, let's wrap it up with this one. So let's have a little look at this. So what we've got here, beautiful price action actually when you really think about it. So it's inverted, isn't it? No, it's not. Price action. We've got a little bit of liquidity, failed continuation, point just above. We've got it over here, sitting on the low. We've then got this. What we've got a rejection candle right there on the weekly. So what we can see is prices actually just sold off from there. So if we zoom in on that, so you understand what I'm looking at. I'm looking at, that's the point of where the liquidity is sitting, maybe that little bit of price action just above it. Price has failed to create continuation and move higher. It then created a footprint, it then sold off, near missed it, came back down, scooped up, then tagged it out. It left a nice weekly bearish candle and sold off. Very simple trade right there. I'll clear that off. And I'll just put this on. Right, now I'll just put it on like that. Go to the daily. Now you can see exactly what I can see. Now the thing I don't like about this is it's not always the case where we get such a large pattern like this high up in the run, but it does happen. It's just I would wait for insurance entry at that point, right? So I'll go to the 4 hour. But just to show you, we had that strong weekly candle, so we were closing around about here somewhere. So we'd wait for the next week now in that case. And then what we have is, we know that the DXY could potentially go higher at this point if you were tracking this. You can see gaps, came in, took out the low, scooped double bottom, correctively came back up, short-lived move, tapped in, sold, liquidity, boom, sold. And we're pretty much here, so there's not a lot of extra price action we can play with, but we'll add that same methodology as we did. So that's the base, and then basically we're then looking at this bit of price action to create something for us to continue lower. How would you have taken this? It wouldn't have been easy, I'll be honest with you. You'd have had to use the lower time frames. But let's say we were not using low time frames and just sticking with the 4. At that point there, we can see that obviously we have liquidity point there. We have inflection point right here. Price came in, scooped, tapped into this area, sold off. As it came back in, you would have taken your trade pretty much right there and took stops above. It would have been a difficult trade, I'll be honest with you, because you'd be playing it for a 1.5 and this could still develop and get a bit messy. But when you look at the overall structure, we could play this into the low here, and then as we marked on that low for 2.1, you could have had about % locked in. Give or take, you probably would maybe survive that, I'm not sure. And then it would have sold off, continued, and we'd just be continuing to play the short. Now the only point here now is that you've broken the low and it's messing about. So we want to see more for follow through to the downside. But actually, I'll go here. Yeah. It's possible, it is very possible that we could pull back. And I think the case is, as you run around about 2% there, yeah, you don't really want to be messing about too much, because if I mark this up here, and we see this overall move, oops, the wrong way. Let's just mark up this move and see. if we've tapped into 90% of this range already, yeah, we have. So for that case there, I'm not going to be holding on to this trade. Like the 90% is pretty much, it's time to move for me. I think what's possible right now is we're probably going to see price come back up to these areas, and then back down, and then we just go do whatever we have to do. If that's going to be the play, that's something that we'll bear in mind. So something that I'm just going to be looking at, but I'm not going to be taking Aussie US dollar trade right now until we get something proper developed. I'll have to go down to lower time frames, so we'll go back to the 4. And as we identified from the 4 hour, there was only one trade, which probably would have walked away with about 2.7%. Nothing special, nothing really in here. That is what it is. Let's go to the hourly. So now on the hourly, we can identify the trades. Great, so there was only 2 points we were really looking at from the 4 hour perspective. So there's no reason for us to be starting to make things up. We're looking at this level here, which essentially was the retest of that. There was no trade just yet in here, I'll be honest with you. There was that bit of a scoop there and that sell, but nothing developed. And then we had this developing in here, failed, pushed up, came back down. These are the tricky ones. There's this. Right, now this comes into certain market conditioning of momentum. You could have probably taken that trade. Again, I'm not a huge fan of jumping into trades like this when I'm in drawdown or break even. It's something that when you're up in a month and you can risk it, you can take that on 0.5%, 1/4%, and you know you still walk away with something, so it's pretty decent. But I'm not somebody to want to always just risk my money on something that I'm not too sure about, because of where it was positioned. It could mess about, become corrective, become something larger. I would leave it alone, but sometimes when you're up, you can get eager and things happen. So we can see that price didn't respond to this as it continued pushing higher. We look at the next point here, but really and truly we are looking at that point here. We pushed down and we created a bit of a correction there. We sold off. This is where I'm really looking at, actually. I'm looking at price here, and I think there was a trade in here, to be honest. We sold off, came out too low. Yeah, if we came back up for one more, that would have been decent. We tap in, get a sell there, or even a bit tighter, and we would have played it low, but we didn't get it. So again, there was no trade. This is the power of having multiple pairs on your watch list as well, because you can have 3-4 trades like that. 2 of them don't play out, 1 of them plays out, and boom, you know, you've been able to capitalize and get a trade. Another trade here, yeah, I think just looking at it, it's very irregular. Yeah, no trade. So I assume on the 15 there was I can't even see the data point. What am I paying for? Anyway, probably in there was something I could have identified on the 15. I'm not too sure. Yeah. What am I? Where were we? Oh, we were over here? No. Were we that far back? Flipping on. Let's go 4 hour. Where were we? No, I don't think we were that far back. I think. Anyway, it is what it is. So, yeah, as we could see, there was a lot of interesting little price action intricacies there. We can see time and time again, you know, if you just mark it up, you just scan through it, You can see like near miss, the gap, we sold off. This is exactly what we just looked at. Then you scooped up, you sold off, probably had entries in there. We then tapped into the low, failed, continued. We had a bit of liquidity there. Same thing happened. Continuation, push down. Another little scoop there, sold off, tapped into the low, continued, continuation, continued, failed over here. Potentially a loss, who knows? Then we sold, we came back up. We had all of this. Not the best price action. We then eventually re-tapped into this area but left a gap to this one. Push down, continuation, sold off, push down, continuation, tapped into that low. We then correctively came back up. We didn't quite get a trade in there, but then we had this trade here, sold off, tapped into that low, came back up, re-tapped into this low, retested this, sold off, failed to continue, M-starred, sold off, continuation, went continuation, played into that low, got super corrective, failed, came back up, squeezed, pushed up, failed to reach any of that, sold off, continuation, on the low, not the best one, and then we then created this entry in there, possibly, maybe a break even, sold off, failed to sell off again into those areas, came back up, continuation, pushed up, didn't get the continuation, unfortunately. There was a continuation in there, so maybe another trade, then sold off, took out all that liquidity, tapped into the base, pushed back up, probably got continuation in those areas, pushed up, retested, tapped into this area, pushed down, retested, came back up, took out that liquidity finally, and then we sold off, got the continuation, V-shape, and so forth. So when you build the context now, you can see how Aussie US dollar was moving, consistent throughout this whole process. Again, this is the daily, so when you're looking at it like this, it's better because you can still make a lot of money in those little swings, and that's probably swing trading in a nutshell. But yeah, guys, hope this video was useful as usual. If there was any questions, anything you wanted to ask me, feel free to drop a comment below, and yeah, I'll catch you guys in another video.